Welcome to the Halftime Report. I'm Scott Walker, front and center this hour. The best way to play the markets at new highs. We will debate that with the investment committee. Joining me today, Joe Terranova, Steve Weiss, Kevin Simpson, and Bryn Talkington. We're green across the board. We did have ADP, which was a miss. The dollar's up. Well, Dow is back red, but it's hugging the flat line here. The president says he has a deal with Vietnam. RBC's Lori Calvasina says the rebound, Bryn, is starting to feel full from a few different vantage points. What about your vantage point? How's this market feel to you?
I feel the growthy growth stocks, the Robinhoods, the Palantirs, Spotify's, et cetera, I feel like those need to stop going higher. I feel like there's been so much ebullition there. You want to see the value names be able to move up more than just one day yesterday, because those are the have-nots. And so I think after this bill gets passed, we're going to hear a lot of rhetoric from the president, Bessent, and the Senate, the House saying how pro-growth this is going to be, how stimulative this is going to be while not causing inflation. So maybe those value names can kind of catch a bid and do a little bit of catch-up. But right now, the growth trade really is leading the charge and seems to be overdone.
Joe, we really don't have much follow-through at all on what was happening yesterday, where it was, NASDAQ down, Dow up big, winners were losers, losers were winners. We thought maybe that was a one-day phenomenon, and maybe it's going to prove to be, and only time is going to tell. But when Lori Calvasina says, okay, the rebound feels a little full at this point because we've rebounded a lot, do you tend to agree or disagree with that?
I don't like that we have lost the momentum factor. I often say that the momentum factor is one of the better factors in providing the evidence that we are in the midst of a very strong bull market. Listen, I also don't like the fact that yields are higher today. I think it's a little bit more going on here than surrounding the bill in Washington, D.C. If you look globally, you've got some challenges. Certainly in the UK right now, you have yields there in the long end up 20 basis points. So we might be entering a phase here over the next 90 days where the bond market takes control. We get in this contentious debate on whether the Fed is going to cut. I still think September 17th they will be cutting. But I think the third quarter, if the bond market takes control, then we could be susceptible to a sideways to lower quarter.
Yeah. I did mention that we didn't have all that much on the rotation continuation, except Apple is leading the Dow. It's up near 2%, and it did get upgraded today. It's from Jefferies. We haven't said Apple and upgrade in the same sentence very many times over the last several months, but it did today. Now it's to hold. It wasn't underperform, which was a significant call in and of itself. But we have been discussing over the last few days, Kevin, as to whether we were going to have a turning point for shares of one of America's most loved stocks and one of America's most owned stocks and one of the Mag 7's worst stocks year to date. We going to have a better second half for Apple?
Well, I sure hope so. And I think the move yesterday that was sparking the recovery in the stock had a lot to do with their AI plans. And if they give up the internal ability to create Apple Intelligence and they tack onto a Scale AI, a Perplexity, in this case, I think they're talking about Anthropic and OpenAI more as a dominant player, I think that would be fantastic for the stock because you've got 2.3 billion active users. And if all of us collectively could actually turn Siri on and expect it to work occasionally, I think that would be a great step up. So I'm optimistic on the stock for the second half. I like the upgrade, and I think you can buy it here.
Apple's up 5% twice this week. And maybe sentiment is starting to turn. That, okay, if they make a decision that rather than in-house, they go to a third party for a significant portion of their AI, their aspirations around Siri, so what? It's a significant move, and it's the right move. And if you get AI right, better late than never.
Yeah, I agree with that. And they're always late because they don't innovate. So they wait for somebody else to innovate, and then they copy it. However, they got caught with their pants down here because this is not where you can copy somebody else's features. You need the actual brains and underpinning of it. So they can lease it. And I think that would be a great move for them because you've delayed, AI for Siri, et cetera, for a long time now. Remember, it was promised, almost a year ago at this point. So I think that would be positive. I also think part of it, and I agree with Kevin, that's part of what's driving it. I also think what's driving is you've seen such massive performance from the bottom on the other Mag 7 stocks that people looking to find so-called bargains, and this is a catch-up trade as well. So you got those two things working for it. I still think that the others will outperform, but we've seen the bottom in Apple. Normally, if it were an Apple or another company, you'd be trading a lot lower in valuation, but because they have been slow revenue growth, slow earnings growth over the last number of years. But at this point, I would still rather be in the other Mag 7 stocks for enduring performance.
On Bryn, the innovation aspect of this, Digitimes is reporting that Apple's begun prototyping a foldable iPhone, and they eye a 2026 launch. What do you make of that news in the total story of whether you think Apple has the ability to have a really sizable rebound over the next 6 months? Because the year to date, it's down 16%, and that's after a nice move yesterday.
So, I guess to Steve's point, so they're just going to copy Samsung. We already have a foldable phone. So it's like, this is where, that's not innovative. That's just copying what Samsung already has. And so I find that as
but how many
nothing.
times do you hear people talk about the Samsung phones? So what?
Never.
Why has that ever mattered?
It's just
why
like
is it going to matter now?
It's just a feature. It's there. So if you think about Apple, the vast majority of their revenues come from the hardware of people buying iPhones. And so the thesis a year and a half ago, which I disagreed with, I think Steve disagreed with it too, is that the iPhone 16 was not going to be exponential. It was going to be incremental. So now we're at the iPhone 17. And so how are you going to get us to speed up? Like, I have an iPhone 14. I'm very happy with it. How are you going to get the globe to speed up that cycle? It's not going to be with a foldable phone. And so I think with Apple, this is a great company. They buy back their stocks. We all use their devices. But I think they are in that somewhat of a quandary of, this is a late stage company that really needs to innovate. And they have very big revenue numbers, but they're not growing. And so I think a foldable phone is a nothing burger. I think buying back shares is still overdone. And how do you innovate? How does a hardware company innovate when all of the innovation is coming from software? And I think that's the big question with the stock. I still own the stock. I sold half in December. But I just think investors do need to understand, we've seen this playbook before. Eastman Kodak, Polaroid, IBM, Cisco. They really need to do something they haven't been comfortable doing in the past, which is to buy a company because they have to buy that innovation because they're not doing it internally.
You'll let us know when you sell the other half, because sounds like you have one foot out the door on the second half of your holding. Certainly doesn't make a big case behind it.
No, it doesn't. Look, I think we're always searching for some fundamental catalyst. I think Steve really nailed it. A lot of the story so far in 2025, when you're looking at these mega cap companies, it's all about Meta, it's all about NVIDIA, it's all about Microsoft. There's a clear delineation. And then on the other side, there's concerns surrounding Alphabet. We know the concerns with Apple, and they haven't performed. Well, sentiment and positioning right now probably for Apple are as poor as it has been in many, many years. And for a trade, I do think, I said it yesterday, I think you could buy this for a trade. I think it probably goes 220, 225 easily. Doesn't mean 6 months from now it's the leader, but you're going to kind of get a little bit of a better feeling surrounding that sentiment because you got some clarity yesterday that maybe they have a roadmap in front of them as it relates to the AI strategy. We don't have to approve it. We don't have to agree with it, but at least you know the direction that ultimately.
Do you not agree with it?
Well, I would have liked to have seen them innovate on their own, not have to go to a third party.
What difference does it? I don't understand what difference it makes.
It doesn't make a difference. I don't think it makes a difference to the business model. I don't think it makes a difference to revenue. I think what we had wanted over the last 6 months is for them to be competitive with the other mega cap technology companies in an AI strategy. And just because we were unsatisfied in that regard, to your point, it probably doesn't make a difference for the share price.
Here's why it makes a difference. It doesn't make a difference today, but it makes a difference going forward. Because as AI continues to improve, and as OpenAI and Anthropic continue to innovate, and Meta and the others on AI, Apple's not going to be innovating on it because they don't have those people internally. So you see the major.
Yeah, but if they're doing the deals with the innovators, what difference does that make?
They'll be further back in the queue.
Why?
For those upgrades. Because they're going to use them themselves first. So OpenAI is going to deploy those first. Microsoft also has a call on what they're doing as a large shareholder in the company. So it's always the innovators who get first dibs, and then the ones that are buying from them, depending upon the check.
Apple's
now,
not going to do a deal
way.
with one of these companies and then watch whatever terms they pay, watch the innovations go to somebody else.
Well, they're going to have to get there with I don't think that's true. They are not in the premier negotiating position right now, unless they want to write a significantly larger check, and then you could ask, why not buy Perplexity, which is phenomenal AI in search.
Well, that seems to be where everybody's talking about. What if they did do that? What if they did do that? Gene Munster was on Closing Bell with us yesterday, said they should buy Perplexity. Alex Kantrowitz was at WWDC with us, said they should buy Perplexity. If they buy Perplexity, are you going to be happy with that?
Yeah, I would be. There'd be some dilution because of the price tag, but yes, I would be happy with it. They've got to use their cash for something. If you recall, I wanted to buy Netflix when it was a $50 billion market cap. Think of what that would have done for them. How many more eyeballs? Look, it's got great products. Once you're in it, you're locked in. But believe me, the foldable phone, as Brent says, is not the key. I've seen foldable phones from Samsung. I'm sure we all have. They're unwieldy. The form factor, unless they make it equivalent to this, and this is going to go lighter, then people aren't going to want it. It's a gimmick.
Bryn, I saw you raising your hand over there.
Yeah. So it's like I want to be balanced here. So why do you buy Apple today? Why do I still hold it? Is I still believe that Siri is the Trojan horse of all of this because we're all still using our Apple devices. So like I have the Meta Ray-Bans, but you still have to use them through your Apple phone. And where Apple dominates everybody else is security. And so if you think about this AI assistant, ultimately, once again, you have Alexa, but you have the app on your phone. And so people trust Apple. And so if they can get Siri, whether it's an acquisition, what have you, buying talent like Meta's doing, where we can have control and security over our data inside of there to be able to make plane reservations, to look in our emails. Because I do think that's where ultimately this company can execute, but it's a timing perspective. And so I think that you do need to think that Tim Cook is going to pull it off, because I do think from a security perspective, no one else does it like Apple.
Yeah.
Let me sum it up this way. I need a reason to upgrade from my 14 to a 17. They didn't give it to me for this 15. They didn't give it to me for the 16. I'm still waiting. I'm happy to hold this through the 20 as long as it still works.
But I think that's the point. The ecosystem retention is remarkable for this company.
But you need to
we'll sit there and we will wait. And they will pay you to wait because they'll buy back their stock.
So Tesla is another stock I want to look at today. It's looking to snap a 6-day losing streak. It is back above $1 trillion in market cap. Speaking of mega caps that have not performed well, down more than 20% year to date. Kev, what's your take here? Their deliveries missed. Dan Ives said they were way better than feared, which maybe matters more than anything else, and why the stock is reacting today the way it is.
Seems kind of pathetic that we're getting excited because they were way better than feared. So if you're looking at this as an
when feared
automobile
was pretty
company,
bad, when actual is pretty bad, bad also.
13% is pretty lousy. Luckily, we have only a 2.5% position in this. It's underweight the various indices. I think that this is always a reminder to me, like when you're sitting in high school and you think of like the smartest kid in the room, you may have been you. But they don't always have the same street smart.
I love the props. The only one who hasn't given me props today is you, Scott.
Much like Steve Weiss, they don't always have.
You showed up in that sport jacket. That's probably the reason why. Continue, please.
Try to learn how to read the room.
Can we go
Elon
with the
Musk,
facts, please? I don't want to. Just tell me the story.
I'm speaking specifically about Elon Musk. Whenever he's fighting with Donald Trump, that's bad for the stock. So if you're a CEO, take care of your shareholders and focus on that. So this is a company that we love for robotics, self-driving, and all of the other things that come along with the robotics. But for right now, if you're looking at it on today's news, it's not a buy by any means.
Bryn, what do you think? You've been the most high-profile shareholder of Tesla on this program.
Yeah, I mean, I think 250 to 260 to 360 is the range. And so you buy it down there, let it run and sell calls. I think that I've said this before, you currently have with their current business model deterring fundamentals. And so I think that you have to believe that, you know, robotics, that they do some combination with XAI and Dojo on their, or Grok on their Dojo with all of the GPUs that he's building. But I do think that investors are going to give him the benefit of the doubt. But from a trader, once again, 260 to 350, you can drive a truck through that, and that's why the call premium is so high. And so I would assume Kevin, like myself, likes to sell calls on this when it gets above like 340, 350, because I think that's going to be a peak until we start getting some new revenue stream clarity.
Let's play this game. What is going to be the best performing mega cap name over the next 6 months? Microsoft's target today goes to 600 at D.A. Davidson. Amazon's target goes to 250 at Truist. Meta's target goes to 740 at Baird. NVIDIA's closing in on $4 trillion in market cap. Joe Terranova, you're answering the question first.
NVIDIA.
Over the next 6 months.
NVIDIA.
It's up 16% year to date. It trails
you
Meta
don't
and
like my
Microsoft.
answer.
I don't care what your answer is.
Okay, NVIDIA.
Okay.
Meta.
Why?
Because I think while they're all overvalued, you know,
Based
I think
on
this
what?
is the last.
Why are they all
based upon the
overvalued?
investments, they're based upon PE, trailing PE.
Well, I know you're talking about the PE, but I mean, what's the NVIDIA's overvalued?
Yeah, I think it's
Meta's overvalued?
I believe it is. Yeah.
Alphabet's
and I'm
overvalued?
fine with that. Alphabet's not, but there's a fundamental issue with Alphabet, which is search, and that I think is going to keep a lid on the stock. But Meta is just making investment after investment in AI, and I think that's going to continue to pay dividends.
I know, but these companies are all buying NVIDIA's product.
Mm-hmm. They are, but Meta's also making their own chips. Amazon's making their own chips. Google's making their own chips eventually, and the idea of making their own chips is to dig into the dominant market share that NVIDIA has. So eventually that will start to hit NVIDIA, and they've already been producing chips that for their own uses. And maybe they'll produce enough to sell and compete with NVIDIA.
What's your answer?
My answer is Amazon, but I don't think either of these two stocks are overvalued. I think you can buy NVIDIA, I think you can buy Meta, and certainly you can buy Amazon down here. This one's relatively underperformed its peer group. You've got AWS, which is incredible. You've got Prime, you've got advertising. They're getting into robotics, satellite. It's just a very diversified company, certainly led by AWS at the moment.
Bryn, what would your answer be?
Oh, NVIDIA. You know, NVIDIA's been basing out, that broke through that 145, 150. All roads lead to NVIDIA. Meta's spending money. They're all spending money. They may be buying chips, making their own chips, but NVIDIA is not making chips. They're making 70-pound to 1-ton tech stacks that people are using for data centers. And so I think this breakout you can get if the market continues to rally. NVIDIA, you know, goes to 200. So I'll go with Joe with NVIDIA, $200 price target.
Well, we'll watch the $4 trillion level on the market cap. Watching the banks, too. Bank stocks are at a 3-year high. The biggest banks are raising their dividends. They're announcing buybacks. That's after the stress tests went by with flying colors. Goldman's dividend goes to $4 from $3, and every bank on this list is raised. I don't need to tell you the levels because they don't really mean anything to you if I do that. But what about the bank stocks here?
I'm maintaining the positioning that I have, certainly in Goldman Sachs, J.P. Morgan, Morgan Stanley is a name that I owned previously in the last several years. Unfortunately, I stepped away from it. I'm looking to get back into that once again. I think all of these money center banks are in the sweet spot. I think the regulatory reform is real, the clarity surrounding what taxes are going to be looking like, and I do think you're going to see an uptick in M&A. The one thing about the banks is I would watch the regional banks very closely, because if you're looking for the indicator that what we saw yesterday is going to be something that's more than a 24-hour event, it's going to be represented in the regional banks first and foremost.
Citi raises targets on a bunch today. Citizens Financial to 57 from 51. Huntington to 20 from 19. Regions to 27 from 26. U.S. Bancorp to 59 from 55. And you own all those.
I own all of these, and they have not worked in the last quarter. The momentum has been waning significantly, and we need something to act as a catalyst. Maybe that will be a series of rate cuts in the fall. Maybe it's going to be regulatory relief. I'm not necessarily sure where the specific catalyst is going to come from, but I am telling you it will be a leading indicator that the rotation is going to be something a little bit more durable over the course of the year.
Kevin, the other day you made the argument that in this kind of market, you let your horses run. Those were your exact words. Now you're trimming Goldman Sachs, which has been a thoroughbred. Okay? Why are you doing that?
Well, one thing I want to point out with Goldman Sachs on the plus side is that they raised their dividend by 33%. They took it from $3 to $4. That's very powerful. We have a 5% maximum position, so my horses can run only so far. We have a rules-based strategy. It got to be a 6.5%, 7% weighting. I love the name. We have a full position in Goldman, a full position in JP Morgan. But in active management, when you have a stock that's up like that and you run your process, you've got to follow it. So it's not different this time. We love the name. I've got some free cash. I'll sell into strength any day of the week.
Weiss Goldman's target to 775 at B of A. It was 700. 715 at Evercore. It was 630. There's a lot of momentum, as Joe was starting to show off around these stocks.
Yeah, I mean, I think everybody knows where I stand with Goldman. I'm nonplussed by upgraded price targets because they just want to stay on board. I don't blame them. But the story is the same as it was when their target was 700. Look, this is all happening without the capital markets really opening up, particularly on the public side, and with rates being where they are, limiting M&A activity. So think of the momentum in fundamentals, forget about the stock price, when that kicks in with all of them. And you can look at any of the large bank charts. They pretty much all look the same, with the exception of the spike in Citi that we've recently seen. But so I don't think you have to be an expert bank analyst to just pick one in this sector. And I continue to have Goldman as my preferred play.
All right, other winners I want to talk about. Robinhood, Bryn, hits a new all-time high yet again. Mizuho puts it on its top picks list. $99 is the price target, so they're going to need to raise that, obviously, because the stock has hit $100 today.
Right, I think it's up 20% in 2 days, right? Vlad was in Cannes talking about tokenizing SpaceX and I think OpenAI opening up crypto in Europe. And so I do agree with this note. The company has caught the zeitgeist of finance. And so the chart looks parabolic, but it is what it is, like a Palantir. At 130, it's bizarre that it's there, but this is where we are. And so I think this company continues to, eat all of the custodians' lunch as their innovation. It's an exciting company, and so I think it's, continues to go higher regardless of where the valuation is stretched or not stretched.
Just real quick, Scott, we love this name also. Juniper is going to be out of the S&P 500 because of the Hewlett-Packard acquisition, and there's a high probability that Robinhood may get into the S&P 500, and that could happen in the next couple of days. So I think that's another catalyst for the move today.
Netflix target to 1525 from 1380. Canaccord. Weiss, you want to take on that?
Yeah, so they're talking about more leverage to pull, which are more music, live reality shows. It just continues to be, particularly if you get into a really tough economy, it's going to be them. And I also include Disney now in that vertical where, they're the two streaming companies that will do quite well and survive. If you want the purest play, of course, that's Netflix.
Break. You sold Spotify covered calls. You sold Howmet covered calls.
Yeah, just real quick. These both expire next Friday, so they were 11-day options. We did these on Monday. There was tremendous premium heading into the turn of the month, second half of the year, and Bryn, you would love these options. I wish we had more time, but basically we brought in $5 for Howmet, $18 for Spotify. We could buy both of those back for a couple bucks and lock in those profits today if we wanted to.
You own both of these, right?
Everyone has a different strategy. I respect what Kevin's doing here, but the momentum strategy, we let the horses run, and there is no end to our track.
Howmet was down 4% yesterday, and Spotify was down 6%.
Okay. We're going to let it run.
Okay. We'll do our calls of the day next. We'll debate bullish takes on a group of committee stocks. We're back after this. Calls of the day, we lead with Walmart. Mizuho says top pick. It's on the list. 115 is the price target. Nice little increase from there. A decade of investment spend has finally reached a tipping point, in our view, where delivery, convenience are on par with anyone in consumer. Those are big words, Joe T. You own that name.
Where's the mention about tariffs, Scott? Is there anywhere in that report a word tariff? Because that's the problem. That's the reason why, since February, this stock has been on the decline. Stock makes an all-time high in February. Subsequent to that, earnings come out. We go down. We've heard the news surrounding the president and Walmart CEO going back and forth with tariffs, but they have a challenge in tariffs. They have a challenge because they don't want to pass through the cost to you and I. They want to eat the cost, and that is going to eat into margin. So until we get the clarity related to tariffs, the stock is going to continue to move sideways, and we own it.
Stock?
We own it.
The stock's up 9% in 3 months.
The stock has been phenomenal. The stock has been phenomenal over the last 18 months. But it has stalled out in February, and it's specifically because of tariffs. Look at a chart of Costco. They're in the same situation right now. You could talk about others in the retail space. The tariff challenge is real for these companies. And most of these companies, in particular the hyperscalers, they don't want to pass through the cost to the consumer. They want to be able to eat it. Well, that's a problem because it is going to eat up that margin.
Hey, befitting my cheery disposition.
Disposition.
I'll help you out again.
Disposition, befitting that. Here's what's good that's going on, and you're not going to hear it. We saw part of that news in Microsoft today, and I'm equating it to Walmart for the following reason. The headcount reductions, I believe, are because of AI, because they're getting more productivity out of AI.
Okay.
Now, when you go to Walmart, they spoke about dark stores. We're going to see dark stores proliferate. We're going to see it with all retailers. What that means is that you will not need any people in that. The technology exists. Take a look at a private company, Nimble Robotics, where it's fully automated. So you'll have these smaller footprints where you basically call up, make an order, or better yet, you do it on your phone, and that is ready for you as you drive through. It cuts down on theft, which is big for some of these companies. It affects 25% of their profits. So you'll get away, you'll reduce theft, you reduce labor costs, and that's the upside to Walmart, and pick the others. Walgreens, just go down.
Agreed, but that's the technological investment that they've made over the last several years. One of the reasons why we initiated the position in it. Right. I think the question was, what was it, 115 is your price target
115.
there? Okay, how does it get to 115? You have to get away from the headwinds.
It's almost at 100. That's not that big of a move from here.
It was at 105 in February, and it's been, look at what has happened to the stock since February.
Tariffs an issue.
Tariffs, to get to all,
but they said they would raise prices.
You want to get to 115? Let's get some clarity and resolution on the margin challenge they have related to tariffs. We own the stock. I love the stock. Technology's phenomenal. Everything you're citing,
let me ask you this question, though. Is there any company that is better positioned to extract cost concessions from their suppliers than Walmart?
Amazon.
Better positioned?
Yes.
Well, I don't think so, because I think they're equally well positioned. I don't think you have to pick one or the other.
Let's go to Ross Stores, because I started to talk about that, and I just want to get that out. Upgraded today to buy from hold, 150 to 135. You own that name, too.
And again, you can continue to mention tariffs for all of these retail names, but in particular for Ross Store, the challenge that they have in front of them and what potentially could be a catalyst. So Stephanie said yesterday she thinks that there's a potential building recovery in home products. Well, 25% of the sales for this company are related to home goods. So if, in fact, you begin to see that, that is something that reignites the momentum, which was present for this company, but it's kind of similar to Walmart moving sideways.
Why waste time with Ross Stores when you can go to home goods? TJ Maxx does not have a tariff issue. This is an off-rack retailer that is very customer-friendly.
They own home goods.
Yeah, that was my cool, clever
Just
way
make
to do
sure
it.
everybody knows that.
TJ Maxx owns home goods.
And Marmaxx as well.
And that's your best play?
I think within the space, we own Home Depot and TJ Maxx. I love TJ Maxx. The dividend growth, the share buybacks. If you go to this store, you can't find a parking spot. You won't want to wait in line. And this is not a tariff issue. I buy everything here domestically.
Bryn, what's your final trade?
Freeport, FCX. It's been basing out, had resistance at 43 to 45 since 2021. Looks like it's breaking above that.
Thank you very much. Kevin Simpson.
Honeywell, the breakup value will unlock shareholder value.
Okay, thank you. Steve Weiss.
Caterpillar, their engagement with their customers is going to increase sales.
All right, Joe T.
Amgen, series of higher lows breaking out above the 200-day moving average.
Nice move there. I'll see you in a couple hours. The exchange.
Hello and welcome to the segment of the video where we're going to take a look at some of the stocks and ETFs that were just discussed on the halftime report. About 14. In fact, you can see the list right here on the left. Those are the stocks and ETFs we're going to cover. We're also going to cover the indices and some of the Mag 7 stocks, as well as a few member requests that you see right there. So, this is George with Blue Cloud Trading. Why don't we go ahead and get started? We're going to look at the indices first and see how they perform today. Right now, it is Wednesday, July 2nd. It's 4:33 p.m. as I'm recording this video. The Dow Jones was down just 0.02, pretty flat for the day. The NASDAQ, however, it jumped in the morning and then stayed around that level there. It was up 0.94%. The S&P 500 was also up just 0.47%. And the Russell 2000, once again, up today, 1.39%. Let's look at the heat map. This is going to show us the stocks in the S&P 500 that performed the best today. You can see Tesla was up 4.97%. Apple was up. Google, Nvidia, a lot of the semiconductor stocks, except for Intel. Berkshire was down 1.86%. Some of the insurance companies were down. Looks like the healthcare plans were down today. Some of the utilities were down. But the energy stocks did well today. And so did basic material stocks. So let's take a look also at the group scanner. What this looks at specifically is the sector performance per day and week. We'll look at the daily. Basic materials, energy, technology were up the most. And then utilities and healthcare were down. For the 1 week performance, basic materials came up ahead, 4.94%. Industrials, consumer cyclical looked good. Utilities were up just 0.73%. So overall, for the entire week, the sectors are doing well. You can see here in the 1 month performance, it's just the consumer defensives that are down 1.5% and utilities down 0.16%. So technology has had a big run this month, up 9%, 9.08%. So let's get into we're going to start off first with the index ETFs, and then we'll take a look at the stocks that they talked about on the show. So the S&P 500, the SPY, let's move this to the side here. There we go. Get a little more charting space here. So it's broken through that 613.23 level, like I had said back on Friday last week, June 27th, and that's really important. Why? Because that's the prior highs that we've experienced, and then we're experiencing all-time highs now. It was up 0.45% the SPY today, and yeah, it's just looking very bullish. We're using the Ichimoku indicator to help us assess the strength of the trend. So when we see that price is above the moving averages, like the 9 and the 26 period, and that the Chiku span, which is the closing price, okay, when that white line is above the candle 26 periods ago, that's also bullish. And then we also have the future cloud, Senko span A is above the Senko span B. When you've got all those elements together, it's telling us this is a very strong uptrend. Throw on top of that the directional movement index, a secondary indicator that I like to use mostly for confirmation so we can get a sense of the momentum of the move. We use the ADX, and I've got it at a setting of 9, ADX 9. The positive DI is the green line, the negative DI is the red line, and when the green line is above the red line, that's very bullish. When the ADX is moving up, that tells us that the momentum is also increasing, and you can see it right there in the price too. So when this thing starts to, change the momentum, you'll notice it start to either go sideways or start to decline. All right, and when we have the white line moving up, but the red line is above the green line, that's going to tell us that the momentum is increasing. But instead of, being positive, it actually can increase to the downside. All right, so this is agnostic, the ADX. It doesn't really matter, which direction the market's moving. It's just going to tell you if there's more momentum coming in, whether it's going down or moving up when the green line is above the red line. Okay, so let's get into the QQQ ETF, also experiencing all-time highs here. You can see it broke through that 540.81 level, going back all the way to these levels here. And you can see it stalled over there too. And so this is all very positive, positive news, up 0.70%. Here's the DIA ETF for the Dow Jones. This one stalled a little bit, down 0.04%, creating a little bit of a doji type candle. But overall, the momentum is still strong. So this might be a short-lived down day. Caterpillar. I think I accidentally put this in here. It should have been in the CNBC stocks. Let me just throw that back in there. Sorry. There we go. And let's get rid of it. Let's take that. It's not an index, so we're going to cover it, but not quite yet. Russell 2000 is what I wanted to look at. And so remember yesterday I mentioned how for the first time, right, price broke through and closed above the 200-day, and now that we could expect to see this start to moving up further, right? And because why? Because the volume yesterday was higher than the prior day. When the price broke through that 200, it happened on higher volume. The ADX was moving up. The green line is above the red line. All these things were coming into play. Price is above the moving averages in the cloud and everything else. And so it broke through this level right here as well. And now look, it's up 1.39%. So on the daily chart, looks very bullish. Let's take a look at the weekly though. Okay, so on the weekly chart, it's also been moving up. However, we don't have all of the elements of Ichimoku giving us confirmation that this is the proper time to add a position of the Russell into the portfolio. Now, if you want to trade it based on the daily chart, that's completely up to you. Personally, I like to wait for some more confirmation. I like to use the rules of the Ichimoku on both the weekly and the daily time frame, and those are the time frames I use. I'm looking for confluence, right, of the two time frames giving me the same story. And those are the types of stocks or ETFs that I recommend to members when I'm sharing my portfolio in the members only videos. And I'll talk about that in a minute. But so right now, price is inside the Ichimoku cloud. The cloud itself is still bearish on the weekly time frame. It's going to take a little longer for this to materialize. You can see that the Senkou span A is under the Senkou span B. And we're kind of far away from this 244.98. We are now currently about 10% away from the all-time highs, which were from November 29th, 2024. Okay, and actually you can go back in time. Even back here, it was the exact same level. And when it reached that level, price dropped. So, could this price come right back to that 244.98? Certainly. And it's looking like it's moving in that direction. But there are things like the cloud itself is going to be a level of resistance. It might pull back once it hits the top of the cloud. The Chikou span here, the white line has not gotten above the candles yet on the weekly, but you do have bullishness on the daily, like I said before. So you want to get in early, you can certainly use the daily, but just understand that you don't have the confirmation. It's not going to be as strong or a higher probability trade as the SPY, the Qs, and the Dow. And that's because interest rates have not been cut yet. And so the small, the small cap stocks and mid cap stocks are more basically, what's the word I'm looking for? They're more at a disadvantage, right, than the large cap stocks. So yeah, just keep that in mind. All right. Anyway, the VIX dropped down 1.13%. It's at a level of 16.64, so that's very good for the markets. We don't want to see too much volatility because that usually the spikes in the VIX tend to also make the price of the stocks drop. And you'll have an inverse effect with the VIX. And if it's dropping, the market's usually going up. FEZ, which is the Euro Stoxx 50, still under that $60.14 level right there. I think the level now that I'd be focusing mostly on is this prior high right here. I think we're going to rearrange this because this level is no longer relevant. So I'm going to do that with you guys right here. And we're going to look at that high of 60.61. And that's the level I would want to see price getting above. Okay. Before I consider adding a position in FEZ at this point. Now, if you have a position in this is still a very relevant and very strong trend overall. Price has been, if you look at the weekly chart, for example, let's look at the weekly. You can see that price has been above the Tenkan and the Kijun. They're actually at the same level. That's why you don't see the red line. And the cloud itself the future cloud is very bullish. We've got a higher high from the prior high. So the weekly charts look good. It's just on the daily that we've had this recent, crossover of the moving averages, the faster one dropping under the slow. But price is still above the two moving averages. It is currently just kind of, it did break above that little high right there. So we might see it push through that 60.61 level. I don't know if it's going to happen tomorrow. It's a half a day tomorrow in the markets. The market will close, I think, around 1 p.m. tomorrow. And then Friday, obviously, is the 4th of July, so there won't be any trading. So Monday, maybe, Monday or Tuesday, we might see FEZ pop above that 60, 61. I'll be watching it. I'll let you guys know. All right, let's take a look next at the stocks that they talked about on the show. And some of them, not all of them. I don't cover stocks that are in the portfolio, all right, that are in my portfolio on these dailies. Sometimes I might, but for the most part, I don't. Morgan Stanley broke today above the 141.99 level. The one thing that's a little bit suspicious about it is the volume here has been declining for the last 3 days. So as price has moved up, volume has declined. That's a little suspicious. It did break, however. It was up 1.27%. It got above that level. It's at 142.86. So, you know, there's the high, the prior high right there. We'll see what happens tomorrow, but it's not something that I'm interested in jumping into quite yet myself. WFC, which is Wells Fargo, same situation. It broke through a prior high. So the banks are doing really well here. But again, not as much volume on that break as there was the day before and the day before that. Why is that? I don't know, but something to consider, right? The volume represents how many shares were traded. So there were 15.2 million shares traded today versus, let's see, the volume yesterday was, look at the left side there. So what you'll notice is a little box that opens up here, and look around this section right here. And so as I'm hovering right there, you'll see there's the 15.2 million volume. And the day before that, it was around 21 million shares traded. The day before that, 21.7 million shares traded. And so it's declined a little bit. But I like the fact that it's breaking through. This is all good stuff right here. Let's see what happens tomorrow. KRE. It could also be because, you know, people are on vacation right now, right? So that makes kind of sense too. A lot of people are on vacation this week. So let's look at KRE. This is an ETF, a regional banking ETF. And on the weekly chart, you can see that it's popped and broken through the cloud this week. It's more than likely to stay above the cloud. We only have, like I said, you know, a half day tomorrow. Here's the daily chart. So it broke through that level. Actually, it did not break through that level. It's coming to that level, 62.75. That goes back to March 3rd, 2025. Now, here's an interesting pattern. It's called the bullish inverse head and shoulders pattern. How can you identify it? Well, what we're looking for, I'll show you first. I'll show you the pattern itself, and then we'll look at it on the charts here. So let me zoom in on it. This is our patterns cheat sheet. And this is the inverse head and shoulders pattern. So what you're looking for is price that's been dropping, comes down to a level right here, and then moves up. Okay, so it establishes this high here because it drops down and actually breaks down below the prior low. And then it comes right back up and reaches that same level, but then it drops. And then it creates a higher low, as you can see right there, from the prior low. So number 5 is a little bit higher. So this here, for example, would be considered the head and the shoulder and the other shoulder. Okay, and this is actually bullish. Now, the opposite of the inverse head and shoulders is, of course, the traditional head and shoulders pattern. This one right here. This is bearish. So when you see price moving up, reaching a level, coming down to this A level right here, then creating a higher high from the prior high, and then dropping back to that same prior low, but then bouncing off of it, creating a lower high here. And then if it breaks through that support level right there, that's very bearish, and that is called a head and shoulders. Now that's the bearish version. Of course, we're looking at the bullish version right here. And so let's take a look at that inverse head and shoulders pattern on the chart. And so to the plain eye, if you don't really, look at charts that often, it's not going to be that, it's not going to pop on your head. You're not going to see it right away. But I see it all the time. Here's the head, here's the shoulder, and it's not going to be perfect. Here's the other shoulder. So you can see that it broke also through that level of resistance, right? Here we are. This was last week. I'm sorry, yesterday. This was on Tuesday, July 1st. It broke through that level, that head and shoulders, inverse head and shoulders pattern, and it was up another 1.77%. How can we also measure, like, how can we create a target? Well, we can take a look at that level right there. Let's say that that's the level that we're looking at, and we want to create a target. All right, so let's do that. Let me just show you guys something. So let's just say that we're going to throw that right there. And then I'm going to take the square here, and we'll take a look at that low, and we'll bring it right to that level, right to that breakout spot. Then you take that same rectangle and move it right above that level. Now you've got yourself a target of 71.82. How far is that? That's about 12.9% away. All right, now you're also going to probably run into some resistance right at the high of this candle of $70.25. Whoops. Sorry, let me fix that. So those are the levels I would be looking to. If I see that price breaks through that 62.75 level, it might also find some resistance here at 65.73. Okay, I might as well throw that in there too. And this is how you can quickly sort of get an idea of where price might stall. And then you can react to it if you see that 65.57. All right. If you see a reversal candle forming here, if it gets above the 62.75 and then you see a reversal candle, what would that look like? Well, it could be any one of these types of candles right here. Single candle patterns like the hanging man, the shooting star, the gravestone doji right here, the bearish spinning top. Or you might see a double candle negative pattern right here, like one of these two. These are double candle patterns. These are triple candle patterns. So you might see any of these things forming, and then you can say, okay, maybe I'll take my profits at this point. If you guys want to have access to this candle cheat sheet, as well as the patterns cheat sheet, this one here that has multiple patterns in here, you can get it for free on my X page right here, Blue Cloud Trading. You'll find me under the handle on Twitter of @BlueCloudTrader. All right. And then what you need to do is, once you're on the page here, go to the highlights tab here, and then just scroll down a little bit. And that's where you'll find it right here and there. Okay. So that's how you can find it. And if you guys like the, the videos that I'm producing here on the channel, and you want to support the channel, one of the things that you can also do is when you're on the home page here, you can click on the subscribe button. All right. And then once you've subscribed, a new little thing will pop up. It will say the plus button. So then you can also subscribe to join as a member as well, if you choose to. And you can become a Blue Cloud supporter, and you can request a stock to be, or ETF to be analyzed on the show. Blue Cloud Trader, this is where you get access to the exclusive member-only videos that I produce. And I go over my entire portfolio. I go over the strongest stocks. I actually provide 20 stock ideas for the upcoming week, every weekend. And that's really important because we're looking at the best stocks that have excellent technicals on the weekly and daily time frames. And then if you want daily updates on my trades, Blue Cloud Trade, I do a post every day. And let's see, daily trade updates. There it is. Okay. There's also some day trading videos. You become a Blue Cloud Legend level member. So there's 3 tiers. You can choose which one you're interested in. And basically, once you've become a member, there'll be a new tab that pops up right next to the posts. It will look like this, membership. You click on that, and you can access those posts. If you scroll down further, that's where you can find the member-only videos on my homepage. Real easy. Okay, let's get back to what we're talking about. So there's KRE. We talked about the bullish head and shoulders pattern. So that's what I'd be looking at as targets, guys. What about CFG, Citizens Financial Group? Looks good. Very strong uptrend here on the daily chart, getting a little bit far away from the moving averages, which is concerning. You know, because you might, if we have a down day, the next level of support is down over here. That's about, 6% away from where we currently are. The target is 49.25. That's about 4.47%. And that's around based on that prior high right there, November 25th, 2024. So CFG looks good. Here's a weekly chart, also very bullish. I've got all the strongest stocks and ETFs listed here with a blue flag. The ones below don't look as great. HBAN, Huntington Bank Shares, is another stock they brought up. Here's the weekly chart above the cloud, looking good. Coming close to resistance, though. Here's the daily chart. All right, so it's really super close. I would not be adding here. It's just 0.75% from this prior high. Maybe wait until it breaks through that 1754 level. Disney, also pulling back, down 0.41%. Looks good on the daily and on the weekly chart, but it's, we got a negative candle here that formed. It's forming this week. So I don't know if this is going to end up pulling back some more, but it seems to be stalling here. It seems to be stalling. Walmart, daily chart looks good. Overall price is above the moving averages. It's above the cloud. The Chico span is above price, but it did pull back a little, 0.64% today. It does still look good on the weekly chart. Okay. Here's Honeywell on the weekly, coming close to this prior 242.77 level. This was Kevin Simpson's final trade today. So it's very close. It's just about 1.4% away. Here's the daily chart. Okay, so I don't know if I'd be adding at this particular level. It's a little far away from our conversion and the Tenkinson, okay, and Kijinson, the moving averages. Caterpillar was Steve Weiss's final trade. Let's look at the weekly chart first on that one. Coming close. It's above the cloud. It's coming close to some prior highs here. The levels I'll be watching is 411.53 and 418.40. If it breaks through those two levels, then yes, it will be a continuation. How far are we? We're about 3.28% away. So it could certainly move up a little bit more. Okay, now we're going to look at the stocks that don't look that particularly great. There might be some things wrong here. And so the technicals will tell us that. Why? Because it's a rules-based system. Here's the weekly chart. We're developing a bearish engulfing pattern here on the weekly chart with Spotify. What is that? A bearish engulfing pattern. It's again, we can consult the candlestick cheat sheet here and look under double candle patterns, and there it is. It's when, okay, you've got a bullish candle and then a second candle that engulfs, okay, the prior candle, and it's a negative candle. That's what we have here. Okay, it's engulfing this candle. Down 1.78% on the weekly. Here's a daily chart. You can see it's also dropping a little bit. It did find some support, though, at the Kijinson, so. But we also have a negative crossover with Spotify. You can see the red line is above the green line on the daily chart. We might get a bounce, okay, tomorrow. Who knows? But I'm just saying it's showing some weakness here. ROST is Ross Stores. This one's on the daily chart is still under the cloud. So one of the rules of the Ichimoku is you don't want to add positions when price is under the cloud because you're technically in a bear trend. Here's the lower high from the prior one. We broke that prior low right there with a lower low. And you've got resistance. You get the 200-day waiting right there. You've got the cloud waiting right there. I'd hold off on that one. TJX is inside the cloud. Also, another rule is you don't want to be adding if price is inside the cloud. So inside or under. And that's where we're at with this one. I had TJX as a position I added it back on April 17th. I closed it on May 20th for a 6.4% profit. Ironically, on this trade here, I shared that, of course, with members. You can see the doji type spinning top candle. And it was far away from the moving averages. And look, it gapped down the very next day and then dropped. Now, since that level, let's see how far down it went. I'm curious. From that point there to the low, it dropped about 11% in 1.2 months. And since then, it's recovered a little bit here. But that's about it. So not a stock I'd be interested in at this point. Home Depot just recently broke yesterday above the cloud on the daily chart. But we still have a bearish cloud here. All right. And on the weekly chart, It's under the cloud. So no on Home Depot. Josh Brown liked this one back on January 23rd. It hasn't really done that well. Here's January 23rd right here. Let me just throw the daily chart. January 23rd was right there. And it moved up a little bit, like about 3%, and then it dropped 20%, and now it's down 9.97% 5 months later. So Home Depot, not something I'm interested in personally. FCX, this was Brin's final trade, October 17th, June 2nd, and July 2nd. This one's done pretty good. It's in copper industry, and it's above the 200-day moving average on the daily. Here it is on the weekly, though. Still inside the Ichimoku cloud, which is why it's not colored blue, the flag here. Amgen, also inside the cloud. No on that one. Okay, that's a healthcare sector. On the daily chart, it did break through the 200, but it's stalling around the highs here. So not a buy signal for me. Okay, now let's take a look at some of the Mag 7 stocks that I don't have positions in. Google had a nice day today. It was up 1.59% on the daily, and it looks pretty bullish, except for the fact that the faster moving average is under the slower one. And on the weekly chart, you can see it is still technically, let me see what the price is there. The closing price was 178.64. So it did close above the cloud today. That's very important. It didn't close, well, when I say close, it did not close. This is a weekly chart. So this candle is still forming. Maybe tomorrow it will close above the cloud, and that will be bullish. The only negative with Google right now is that the Chiku span is still under price, and the faster moving average on the weekly is still under the slower moving average. Okay, we've got a lower low here from the prior low. So, I'm not so sure I could be that confident that this thing is going to definitely take off here. You can see the moving average, the directional movement index on the weekly is also still negative. Tesla up 4.97%, but look at the directional movement index. Negative is above positive. You're inside the cloud. So no on Tesla on the weekly. On the daily chart, still under the moving averages. Okay. Amazon looks more bullish. It was down 0.24. Above the moving averages, above the cloud. Still strong uptrend here. I don't have a position in this. Here's a weekly chart. Also starting to look, stronger as far as the faster moving average closing above the Kijun in there. But the Chiku span is still under the candle. That's the white line. And that should be above, like it was back here. So that has not transpired for Amazon. Apple is currently stalling on the weekly chart, even though it was up 2.22%. Right there, right at the bottom of the cloud. I would not be adding here. Not a good time to add. Here's the daily chart. Yes, it broke through the cloud. So short term, it might move up a little bit more. It might even reach the 219.71 level, potentially, based on these prior lows here. But I'm not too confident with Apple right now based on the weekly chart. Let's take a look at these three stocks recommended, or not recommended, but requested to be analyzed by members. SII is the ticker symbol. It's called Sprott Inc. It's a asset management. Is this industry, financial services sector. This is a really nice chart. This is the weekly chart. Look at all these beautiful weeks moving up steadily. Here's the weekly. Here's the daily chart. Right? This has moved up quite a bit. Notice how once it broke through the 200-day moving average and above the moving averages right here, from that point, it's moved up 54.83%. Big move. And so what would I say about this? I mean, it's still very bullish. It's lost a little bit of the momentum here with the ADX going sideways, but this is still a hold as far as I'm concerned. There's no evidence to substantiate that you should be closing your position here, right? That's the daily, and here's the weekly. Now, it looks a bit extended on the weekly chart. I will say that. The next earnings are on August 6th. Okay, that's the date that I'd be watching closely because a negative earnings report could trigger a big drop, and that's what you want to watch out for. Next stock is Workday Inc. Let's look at the weekly first. It's currently under the cloud right now. but it's above the 200. So you've got support right there. That's the level I'd be watching, the 227.43. Maybe it will hold up above that on the daily chart. It's also under the Ichimoku cloud. You know, it's just not looking that great right now. I would be using this if I had a position, and I don't, but if I had a position in Workday, I would be watching that 200-day, you know, checking to see if it can hold up above that level. Certainly would not be adding positions here, okay? Next one is Pfizer. This one's also under the cloud. This was, I think, Josh Brown's favorite, not favorite, but Josh Brown had this in his portfolio, but I think he also closed out of this eventually at some point because it really wasn't moving anywhere. And as I mentioned before, when price is under the cloud, you know, you might see the fundamentals looking really good because it's like, ooh, it's gotten cheaper, right? The price up here is $62 back in 2021. And now it's at 25.32. The problem is these declines can last for years. Here we are from 2022, 2023, 2024, 2025. Do you want to hold positions that are declining for that long? How do we know for sure that this is the turnaround point? We don't. Okay? And so because of that, I would not be adding a position here. The cloud is going to give you some a heads up. When price starts breaking through on the weekly, that's when you can start considering it. And then on the daily chart, yes, it's looking more bullish, but we've got that declining 200-day waiting right there. It's only about 2% away from where we currently are. And that is going to do it. Now, I will say this. Over the weekend, I'll probably do another video. Now, I always do the members-only video, okay? I always do the members-only video, but where I go over the portfolio. But one additional type of video that I'm going to be doing is in, just show you guys. Click on 9 more links here. So if you're on my homepage and you click on and 9 more links, you can see all the links that are here. By the way, there's also a $25 coupon for the software that I use, the TC2000 charting software. You can click that link for that. Here's also the link for my X Twitter page. Okay. But if you do use the software and you guys want to use the layout, the TC2000 chart layout that I use, you click on this link here, and you can actually import it, okay, in TC2000, which is kind of cool. And then it can look just like my charts. What else? Going back to what we're just talking about here, scrolling down to more. Actually, right here, Patreon. I actually have a Patreon page too. And I've got videos here that I don't have anywhere else. Okay, so I do plan on doing another Patreon video over the weekend at some point. So look out for that. I'll probably be covering sectors, ETFs. I'll be covering countries. Okay, country ETFs as well. Maybe something to consider. All right, and that's going to do it for this video. Thanks for watching. Thanks for supporting the channel. Appreciate all of you. Hope you all have a great 4th of July. I'm not sure if I will do a video tomorrow, honestly. It's possible I may not do a video tomorrow. So just giving you a heads up. But yeah, have a great 4th if I don't. Okay? Talk to you later, guys.